just to put some context for what's going on with the China stimulus, I'm just going to play this video for us, and we'll come back on the other side.
So the question was China going to do the things that you want them to do? Okay, are they going to do the easing measures that you want them to do? So yeah, they came the other day, and what's his name, Pan Gongsheng, he came out and he was like jovial. It's like, whoa, jovial, saying we're going to cut and we'll give you more. And he said we'll do more and more if needed. Now the Chinese to say we'll do more and more if needed, they don't say that, because it's not been healthy to say those sort of things. And that's very strange language, especially for any central banker, but especially over there. So that was the first thing that happened. And last night, we heard that they were going to have some kind of meeting, but they kind of blew away expectations on the physical stimulus. What can happen around the world when they do that? That's what you have to ask yourself now. So now you have the Fed. So just to backdrop again, the Fed's easing. You have a few more easings coming. The Europeans are lowering rates. And now the Chinese are lowering rates, okay? And they're aggressive in how they're going to do it. And they're also, believe this or not, swap facilities to buy stocks. Encouraging buyback of stocks. Encouraging buybacks of stocks. Okay, this is China, all right? This is stock buybacks. Not only encouraging it, lending you money.
So that is the PBOC, the People's Bank of China, who are, for the first time that anyone can remember, not only are cutting rates, but are cutting it dramatically, and promising that no matter what, they're going to keep on pumping liquidity into the markets. Now, if anyone's been paying attention to the China market, it's not been good. All right, the Chinese stocks have been down. P's are down. It's been pretty rough. I mean, essentially, they're at potentially 2008 global financial crisis levels of recession on the beginning part of that in China. And so in order to offset that, they are pumping money into their systems. They're lowering interest rates, they're lowering RRP, they're buying back stock in the Chinese markets. That's never before have we ever seen that. That stuff we saw like in 2020 COVID levels, where they were buying back stocks in order to keep the market up. Not just China, but countries around the world. And now China's doing it. So it's what that means is that I didn't think we would see 2020 levels of liquidity being pumped in by central banks again until some other major crisis. But I didn't think we would see 50 basis point cut from the Fed with no there was no drop in the market. There was nothing. What are they seeing that is saying that they better now cut 50 basis points? They were all very casual about it. It's sort of like, it's like when I tell my wife, hey, maybe we should just go into the car and just drive. Just come in the car right now. Just come in the car right now. We're going to drive somewhere else. What's going on, Tom? Why is there smoke coming out of the house? And so we know that global liquidity, which is the availability of dollars that are flowing through the system, happens often when there's a crisis. COVID V, Volmageddon, Brexit, all these different things. But now we're getting all of that before the crisis. Does that tell you anything that's going to happen, Mike? Does that make you fearful or concerned about what's around the bend?
Well, I've never really been all that attracted to Chinese stocks. In general, returns on equity are, subpar. Same thing with the Japanese markets. It's usually American businesses that truly just put up incredible returns and that obviously get proven out in forward earnings per share. The struggle I have with something like this is that this is going to artificially inflate EPS numbers from any publicly traded Chinese companies. And the reason why is because if they're borrowing money to buy back stock and increasing the amount of outstanding shares, that's obviously going to increase the price per share, right? So we're going to see some improved earnings per share in some of these companies, but it's really kind of a ruse, if you will. And then I guess the question is what's the interest on this? How does this show up as debt on their books as well? As debt to equity starts to increase with some of these companies, I'd be curious about what the health of those books looks like and what the cost of that capital is. Are they lending out this money to do stock buybacks at 0% interest, or what's the interest rate on that?
Or even to buy real estate. The thing is,
yeah,
I don't know all the details of that, but we have seen in China, but we have seen things like that in the United States, where it was possible sometimes to borrow money, and then, a lot of the banks are doing this, borrow money and then invest it without any risk at all. They're just making money on the difference. As long as the thing that you invested in provided a yield that was higher than the yield that you were paying, well, then it was essentially free money. Here, they seem to be going a step further of basically guaranteeing it, that no matter what, you can't actually default on that. We just want you to be pumping money into the systems. There all systems go. Their central bank chairman came out and basically said, we're not going to stop. We're flooding like crazy. And they've been almost completely against that messaging over the last 15 years. So something is happening where they flip their script. Now, the reason I brought up David Tepper is that I didn't put the full thing in that interview clip, but he says at the end, they ask him, okay, where he's investing in some of these stocks. I'll show it to you on the screen over here. These guys are Chinese stocks that within the last couple of weeks have gone up 50%. Right. This is Alibaba. We have the Chinese ETFs. These are, this is straight up. Like this is insane. This is
crazy.
GameStop level jump ups. And he was saying at the end of that they were asking, well, how are you hedging your position here? How are you hedging all these Chinese exposure? Because he said he went all in, 100% all in. And he goes, my hedge is that I'm sure of my trade. He says the hedge fund manager is like, I'm not this is a trade of a lifetime, and I'm going all in, and all I'm waiting for is a dip to happen. If a dip happens, I'm going to buy even more. And he goes, we've never seen anything like this, and these stocks are going to absolutely rip because it has nothing to do with do retail investors think that it's valuable. The government wants it to be up. And
Interesting.
This is what I find to be This is what I find to be interesting, because this is what the point I try to keep hammering home with a bunch of people, that these spikes that we're going to see in these stocks, both up and down, we're going to see more and more and more of them. I know you've heard me say this so many times. Like, we're going to see these spikes up and the spikes down and spikes up, spikes down for the next few years. And the idea is, how do you trade this?
Right. No, I think maybe Tupper's feedback isn't all that surprising. I remember a quote from a long time ago from Warren Buffett his quote was that risk is really not knowing what you're doing. So if he's confident enough in his trade, then he's already managed his risk in theory. The fact that he's all in on it, though, is a little confusing. But if you think it's the trade of a lifetime, then fantastic. Your confidence is either going to pay you handsomely or you're going to lose quite a bit. We've seen fund managers lose more in the past. We've seen them lose billions and billions of dollars. So it's not unusual for a bad bet to be made. That said,
and sometimes the trade is the all-in trade, right? Because if you're right, then you're a genius. For 10 years, you're a genius.
And you're going to, exactly. You can carry your entire career off of one trade sometimes. And sometimes bad bets can have positive outcomes. This could be one of those where it's a bad bet that still has a positive outcome.
That's right. Well, I've been waiting for this liquidity storm, because it's not just PBOC. Like, central banks all around the world, I mean, for the exception of Japan, and they're going to have to do it eventually. If China's increased lowering their interest rates, Japan is going to have to raise theirs. They're adding liquidity, like crazy throughout. And if this causes the currencies over there to strengthen, let's say the yen and the yuan strengthen, well, that'll bring the US dollar down, and that'll be even more liquidity on our fronts. And then this also all pretends to this idea that if this liquidity does funnel through the systems, and these performances are going to happen in these stocks that are go up, not because of fundamentals, not counting liquidity as a fundamental, well, then we're going to have this wealth effect that'll cause more spending, and then inflation at 15%, like we've been talking about, we've been talking about in the last after hours. Well, then the story writes itself, because if we get stocks at all-time highs with liquidity pumped in at 2020 levels, well, we know that inflation story. We know what happens after that. And what is bothering me is that none of these central bankers, none of these economists are even saying anything like that. They're not saying, hey, by the way, we're seeing exactly what we saw 4 years ago. We should expect 15% interest rates. So it's exciting to me, because it's so interesting. The only edge I can have is on these macro moves is that there's an interest for governments and central banks not to. They want to telegraph more money within the system, but they don't want to necessarily say that's the case. It's almost like people don't want to let the cat out of the bag. And so if you're paying attention to PBOC liquidity, well, then you can get an edge on these things if you know these things are going to happen. So I'm expecting the same sort of thing to happen within U.S. equity markets, because they're like usually the last That's usually the last place that happens. And if these guys went up 50% in 3 weeks, we can expect our stock market to also go up 50% in 3 weeks. That can happen. And that to me is long assets and long calls. And you can make 10x on those calls.
Well, I'll tell you what, I'm interested in the carry trade on this as well. If the Chinese government is giving out, any amount of their currency at low interest rates, I'd be interested in leveraging something like this.
Fair enough. Fair enough. Actually, that's actually, I didn't even think about that. Yeah, actually, I used to trade the. Well, no, I can't get currency options on the yuan because there's 2 yuans. There's the onshore and offshore yuan, and I don't know which one will go up in value. So who knows? Aside from that, I am also very interested in the idea of our next story, which is the options on the IBIT ETF, the BlackRock ETF for Bitcoin.